This is going to evolve into yet another banking crisis beyond your wildest dreams, and the banks aren't going to pay for it. You are, and it's already started. There's something called the Federal Reserve discount window. What is the Federal Reserve discount window? This is where banks, financial institutions can go to the Federal Reserve and borrow at a discount. Okay, they make it sound like it's some fancy thing. The discount window. Yeah, they walk up to the discount window and they borrow. All right, so this is considered a last resort effort to keep banks liquid.
Finance expert and full-time capital markets trader Gregory Mannarino warned that engineered liquidity is drying up in the market. Given this, he called on his followers to start preparing for the massive economic collapse. I have been saying for 10 years at one point, a meltdown in the debt market is going to occur. You got cash bleeding on the debt market, global bond yields are rising, and this is putting pressure on the stock market, Mannarino said. Unless the Federal Reserve moves to stop bond yields from rising, the economy would not get any stability in the debt market. Mannarino stated that the world will definitely march right into a liquidity crisis the moment the debt market begins to implode. This, in turn, will melt down 80% of the stock market. The financial expert believes this crisis is well staged and engineered. When I tell you it's over, I'm not just talking about the stock market, it would be the whole financial system, he warned. They're setting it up, and all of this is just a prelude to what's going to come, a liquidity crisis, credit freeze, and this whole system is going to lock up. People are going to be in the streets. The finance forecasters said there is an effort to create an illusion of liquidity, with economic manipulators passing cash back and forth between institutions. According to Mannarino, we're going to have to readdress this relatively soon. Imagine my utter shock here. What this whole thing boils down to is very, very simple. We're in a situation where without the continuous and relentless acquisition and adding on of more debt in perpetuity, we are just done. That's the nature of the beast here, a debt-based economic model, which means that its core debt must be piled on at an ever-increasing amount just to maintain where we are. Most people have no idea that that's how the system works here, he says. But that is a fact. The debt is never meant to be paid back. It's only meant to be expanded on exponentially. So, this is all nonsense. Here's a big show that, oh, we're really going to do something about it now. It's all theater. And we have no representation here in the United States or anywhere around the world. We're being ruled and governed by central banks, and they plan to continue to inflate. We will now get into the video and watch Mannarino break down this massive Ponzi scheme and how to be safe from it. Also, make sure to hit the like button, subscribe, and drop your comments below.
Why would the stock market hate a good jobs number? Because again, the market is like a demented little child that must be constantly reassured that the Federal Reserve is going to have its back. Despite the fact that we just heard from vomitous, putrid, pathetic, yellow stain Powell, Fed chair, who's explaining that, oh, come December, the Federal Reserve is going to start, easing back on their aggressive stance here with regard to rate hikes, and, your market took off on that. So now we got this miraculous number, which is absolutely, completely fabricated. Let me explain this to you. What do we know is going on? Corporate layoffs are on the rise, and these corporations are promising more losses, more job losses for people moving forward. Thousands, tens of thousands of jobs are being lost, but they want you to believe that we're adding jobs. What did we just find out yesterday? The survey or the paper that was written up by Bank of America, starting next year, they're expecting 175,000 jobs net to be lost every month. That number is lowball. I'm telling you, it's going to be 400,000 to 500,000 a month. We're already losing jobs on an epic scale. But you have to understand how this works. Central banks, who are the government, work with the current administration who's allowing them to fulfill their end game by borrowing, making things up out of thin air to pull cash into the now, like, for example, revitalizing tribal languages to throw tens of billions of dollars at. Okay, so what's going on here is this fake number gets floated out. So the market this morning is very unhappy about this supposed miraculous number because it needs to be reassured by the Fed, and it will. They're going to float out creatures. Watch what's going to happen today or tomorrow well, more than likely today, they're going to float out a Fed president or two to say, well, come December, the Fed's going to start easing back, despite the fact that inflation is continuing to rise. By every measure, it will continue to rise. It has nowhere to go but higher. But that's the setup. That's the way it's going to go. So stock futures right now are down a couple hundred points, pointing towards a lower open. Now, off the back of that, you got a knee-jerk higher in the dollar relative strength. That's fear. You got a knee-jerk higher in the 10-year yield, about 10 basis points. That's fear. You got the MMRI higher by about 9 points. That's fear. Good. Let fear do what it's got to do, because I can promise you that if the Fed manages to keep rates suppressed, and that's what they're going to do here, and they manage to ease the market from its anxiety of a supposed fantastic jobs report, we're going to get this year-end rally, because you know how this works. The bigwig CEOs and all those fat cats at these corporations, they need their big, fat, multi-million-dollar year-end bonuses, which are based off of share price. So the market will get propped up. Nothing is what it ever seems to be, people. You all know that. But I want you to understand what's going on here. Again, fake data, none of it is real. You all know that. Corporations laying off thousands and thousands of people, but they want you to believe this miraculous jobs number this morning. I don't buy it, okay? And we can expect this to progress here as the economy continues to be pressured by central banks worldwide who are out to destroy it so they can issue an entirely new system.
Mannarino says understanding can simplify life. What we need to do is stay on the right side of that, and we can do this in many, many different ways. But that's what it comes down to here, the relentless acquisition of debt on an unprecedented scale in perpetuity. No matter what the Fed does, no matter what our so-called representatives do, that's the way it's going to continue. It's just that's the way it is. It's the nature of the beast. It's a really crazy situation. Never get into anything at all that you don't fully understand, warns Mannarino. And, although the markets seem like they're very complicated, they're really not. Just understanding where cash is moving is a big key here.
What do we know? The entire financial system is illiquid. This fractional reserve system, the way this works here, the debt market being a ticking time bomb, you all know that, all plays together here. So what we have is exactly what I've been explaining. So people are unable to save money. As a matter of fact, they've wiped out any savings that they may have. People are now resorting to tapping into retirement accounts after they've maxed out their credit cards just to try to make ends meet here. But we're adding jobs. It's miraculous. That's what they said this morning. And whatever comes out of the lie vision must be true. You know that because they're telling you, right? Anyway, obviously it's a complete falsehood. So what's happening here is banks they're not getting deposits. No savings, no deposits, no loans, and no deals. Henceforth, why banks are now resorting to this last-ditch effort to remain liquid. Understanding that, what bells and whistles should be going off in your head right now. I don't see a reason on this earth or off this earth to keep our cash in these institutions that are more than likely going to start to limit withdrawals or maybe stop them altogether. So I would sincerely consider, if I were you, somewhere to put your cash if you have it. First of all, there's no reason to be in cash. You should have a very finite amount of cash laying around, because if you're in cash, you got to be out of your freaking mind here. You're guaranteed to be losing purchasing power on a greater and greater scale. I've been telling people to get out of the dollar, get more into commodities here moving forward. We're in the end game, people, and I think most of you are well aware of that. At least I hope you are. So understanding just real quick, no savings or no deposits for the banks, no loans and no deals, and now the banks having to resort to approaching the Federal Reserve's discount window to remain liquid. That should tell you, and I warned about this, I think, before anybody else weeks ago, that there was a problem here. The banks, they're not in trouble. You're in trouble. because the banks are going to get either a bail-in or a bail-out. They're going to limit withdrawals. So think about what this means for you, what you should be doing about it. Me personally, I'm telling you the truth. I keep an extremely low amount of cash in my financial institution, which happens to be a credit union, all right? And they're no better off either, all right now. The entire financial system itself is a ticking time bomb, and it's all linked to the debt market. You all know that here. But this is a clear and present danger to everyone, and you should consider what would happen if banks limit withdrawals, because that's going to be the next step. Discount window is a last resort effort here to remain liquid for the banks. Next step is going to be maybe stopping withdrawals. Think about what that means for you.
In other words, cash making its way over into the stock market, inflating a bubble. That bubble in the stock market, which we have, the largest in history right now, is being fueled by the debt market. So, if we understand that mechanism, we also know that it's going to continue to inflate. What does that tell us? Where do we want to be? Let us know your opinions in the comment section. According to Mannarino, we want to be again in equities and hedging ourselves in the long run with metals and cryptocurrencies. Please always ensure you like the videos, subscribe, and turn on notifications. Thanks for watching.